Ladies and gentlemen, good day and welcome to the Prudent Corporate Advisory Services Limited 2Q FY23 results conference call hosted by Equirus Securities. As a reminder, all participant lines will be in a listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohan Mandora from Equirus. Thank you and over to you, Mr. Rohan.
Thank you, Mike. Good afternoon, everyone. Welcome to the Q2 FY23 earnings call of Prudent Corporate Advisory Services Limited to discuss the quarterly performance. To address queries, we have with us from the management Mr. Sanjay Shah, Chairman and MD, Mr. Shirish Patel, CEO and Whole-Time Director, Mr. Chirag Shah, Whole-Time Director, Mr. Chirag Kothari, CFO, and Mr. Parth Parekh, Investor Relations. We will begin with a brief management commentary followed by question and answers. Thank you and over to you, Mr. Sanjay Shah.
Thank you, Rohan. Thank you. Let me first of all welcome everybody to the earnings call of Prudent Corporate Advisory Services Limited for the second quarter of fiscal 2023. Let me give you also a very happy new year and wishes to all of you and thanking everybody for participating and sparing the valuable time. So let me start with the quarter which has gone by. This quarter has been really special for us because we crossed the landmark of 50,000 crore of assets under management, which has been historical for us. Also, as per AMFI's ranking, which if all of you remember, if you are aware, every year AMFI publishes a list of all the mutual fund distributors and their commission is provided by them. So as per the AMFI ranking on the basis of commission earned, we jumped our position by we improved our position by one notch in ranking and we become the second largest non-banking mutual fund distributors of the country. All the efforts which we would have put in for the business has been reflected very well in last quarter's numbers, wherein we recorded the highest revenue and highest profit in our existence. I hope you all would have got the presentation copy handy with you, which have been uploaded on the exchange also yesterday. So probably in the discussions, I'll be giving references to the various slides of the presentation. So now I'll briefly touch upon the this quarter's numbers. So I'll request all of you to move to slide number 35 and 36. So if you look at the slide 35, it's a slide which talks about our closing AUM. So as you all are aware about Prudent being prominent player in the mutual fund distribution, asset under management is a very significant number for us. And our closing AUM in last quarter has gone up by 35% year on year to 52,770 crore. On a quarterly average basis, our AUM has grown by 41% on year-on-year basis to 51,600 crore. And as you see in this slide, in fiscal 23, we are currently running at an average AUM which is almost 30% higher than FY22 numbers. And so FY23 is expected to remain very robust in terms of top line revenue as well as our bottom line numbers. Now I'll tell you to turn to slide number 36. So the slide talks about the variable which has helped us in moving our equity AUM on a year-on-year basis as well as on a sequential basis. So if you look at overall our growth is comprised of two important parameters. One is the new business which we bring from our investors through our channel partners and the mark-to-market gain which we have. So these are the two important parameters. And if you see, this slide talks about our equity AUM has grown by 41% year-on-year basis, which includes our mark-to-market gain, which includes our net sale, as well as Carby assets which has been acquired by us in the last year. So on a sequential basis, our equity AUM has grown by 14% with a substantial movement being led by mark-to-market as far as last quarter is concerned. And the recovery we have been seeing is mainly because of net sales as well as mark-to-market gain. However, on trailing 12 months basis, if you look at the mark-to-market impact has been very muted, only 3%. So one of the major parameters of our AUM growth on a trailing 12 month basis has been little bit subdued. Net equity sales of first half is almost about 2,735 crore, and we are in line with our guidance to achieve a net sales of 5,000 crore. Rather, we are of the view that if you just simply annualize this, probably will be in a position to surpass our target of 5,000 crore of net sales. Now, I'll request you all to turn to page number 37. So, if you look at, I would like to point out that despite all the noise around fintechs, our market share in equity AUM ex ETF. Normally, we do not track ETF because if you look at ETF is mainly the segment which is looked at by the institutional investors, and we strongly represent the India's retail investor segment. So, if you look at our equity AUM ex ETF, our market share has improved from 2%, has improved to 2% from 1.9% a year. 0.4% from a 1.9% a year ago. Our equity mix has also improved significantly by 3.4 percentage points on a year-on-year basis to 94.1%. Another important parameter, if you look at about our business, is the SIP, and our monthly SIP flow for the month of September was very, very strong, 456 crore, when we compare to 307 crore a year ago. So if you look at almost close to 50% growth has came on our SIP book, which is a very, very strong pillar for us. So given the strong traction on SIPs, we expect our gross flow from SIP to be close to 5,200 crore in FY23, and for that matter, what we did is last 6 months actual SIP collections and 456 crore multiplied by 6. That is what the projection is. And if you look at this 5,200 crore of full year collection through SIP, which is almost 13% of my FY23 opening year, which is April 2022 ka jo AUM tha, I think based on that it's a 13%, which is providing us a very strong visibility of the growth. The SIP mobilized during the quarter was at a historic high of around 1,324 crore in last quarter. Almost, so if you look at the gross flow composition, almost 50% money has came through SIP, which is a very, very steady and visible flow. So every second rupee which we collected through gross flow, the second rupee came from SIP. So 50% contribution has been from the SIP, which represents the granularity of our AUM. Now I'll tell all of you to turn to page number 30, slide number 38. So if you look at slide 38, we would like to emphasize on our emerging segment insurance. It formed around 9.5% of our total revenue for this quarter. This vertical has been growing at a faster pace year on year. 2/3 of the revenue from this vertical comes from life insurance and balance comes from general insurance. Our POSP network is also becoming stronger day by day, and when I'm talking to you in the month of end of September, we had 6,992 POSP working with us, and we are strongly relying on this channel to bring scale to this insurance business. Now we can turn to slide number 39. So this is a slide which talks about our consolidated number. So if you look at our revenue has grew by almost 40% year on year, led by strong growth in AUM and change and in mix towards the higher yielding equity AUM. Operating profit growth was at 58%, which is higher than the revenue growth, led by operating leverage. Our operating margin expanded by 3.22% or 322 basis points to 27.2%. Our profit after tax grew at a tad slower than operating profit growth at 41%, mainly led by higher depreciations and lower income. So as you all are aware that last year we paid 151 crore for acquiring Karvi assets, and that 151 crore which we paid is required to be amortized over a period of 10 years equally. So that 15 crore which will come as a depreciation every year. So there are two impacts which comes because of this. One is 151 crore which was the treasury available with the company has been utilized for acquiring Karvi. So there is a dip in other income which is a non-business income, and there is a significant higher provisioning on depreciation side because of amortization of Karvi assets. So depreciation increased by 3 times, led by amortization of Karvi assets, which we acquired in November 21. Similarly, other income also reduced as company used its surplus liquidity of 151 crore for acquiring Karvi assets. Our annualized return on equity in first half stood at 33.5%, which is a very, very healthy number. Another important parameter we want to highlight is the cash flow from operations, and cash flow from operations generated during first half is almost 43 crore, which is much better than. So if you look at, I think we always tell the analysts to track our cash flow from operations, because whatever we paid for acquiring Carvi will be amortized over a period of next 10 years, but 15 crore is going to the additional cash which will be available to us every year. So that's the important parameter. So this is basically about the consolidated financials. In this process, I just wanted to highlight one point, that as a company regularly generate a significant cash, we are always looking for the inorganic growth, and in pursuit of our growth, as we acquired Carvi mutual fund assets amounting to 8,100 crore in November 21. We also made another strategic acquisitions in the month of July. The company signed term sheet on 27th of July to acquire mutual fund AUM of iFAST Financial India Private Limited. We acquired the assets amounting to, so we signed the term sheets, and while I am talking to you, till last month end, we got approximately 500 crore through these acquisitions, and based on the term sheet, we assume that we might require to pay 2.65 crore for this acquisition. Already 1.63 crore has been paid by us in advance. If you look at the cost which we paid, it's hardly about 0.5%, so it's a very good acquisition for us. We acquired 500 crore of retail mutual fund assets from retail distribution network, and it's going to be, even though the amount is very small, but it's going to add a large number of retail IFAs as well as retail assets. So this is broadly about the numbers. Now, before I open the question answer session, I would just like to briefly touch upon growth outlook for the organization, for the Prudent as a company. So let me just briefly touch upon our main growth. There are 4 main growth drivers for us. So number 1 would be the continuous addition of mutual fund distributors. As you are aware that we are the unique B2B2C platform of the country. So as a business strategy, we are focusing aggressively, adding more and more mutual fund distributors, which are the backbone of our business. As on 31st March, we were having 20.4% of country's MFDs associated with us. So that shows how strongly mutual fund distributors are reposing trust in us. In first half of 23, we have added around 2,600 new MFDs. There is an increasing need for mutual fund distributors to collaborate with a tech-based platform to service their clients, and we are capitalizing on this opportunity. As more and more MFDs join the industry, we expect incremental benefit to accrue to our company. Looking at the 2,600 people being added in last 6 months, we believe that in full year we could be able to add totality of about 5,000 distributors in our kitty. Number 2 of our growth driver will be the cross-selling of other products using our strong network of mutual fund distributors. So, as you are aware that we are moving from a single product distributors to a multi-product distributors. So, our multi-product distribution platform has helped us to capitalize on our vast MFD network. Our multi-product platform has also acted as a great value proposition for our mutual fund distributors to join us. So far, company has covered or converted 6,992 existing mutual fund distributors or their family members as point of sales persons who can also sell insurance product apart from other financial products. So in this quarter, insurance revenue formed 9.5% of our total revenue. Now, this would be the third would be the building a strong SIP book by encouraging and educating our mutual fund distributors to build the granular flows. So, as I said you that ours is a very unique B2B2C positioned retail wealth management company, and that has helped us to build our granular flows through SIP. Our monthly SIP flow for the month September was 456 crore, and as I said you, every second rupee of our gross equity flow came through SIP. So given the strong traction of SIP, we expect that the gross flow for the full year likely to be 5,200 crore, which is almost 13% of our opening AUM. So SIP is a strong organic growth. And finally, it is the cash which we regularly generate from the in the business. So our final fourth growth driver is likely to be the effective utilization of cash for inorganic growth opportunities. For inorganic acquisitions, we will be always ready to look at and explore the possibilities. As we generate significant cash, We are always on lookout for something which is lucrative, which might come our way. So these are broadly about our levers, which will help us to maintain our growth momentum going forward. Now I'll just open the Q&A. So moderator, kindly open the floor for the questions. Thank you.
We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hey, good morning, everyone. Firstly, let me congratulate on a great set of numbers yet again. Secondly, a few questions from my side. You mentioned about SIP being a core to your strategy for future growth. Could you give us more details as to what has been the average ticket size for your book and what was the average ticket size for Karvi's book, and how has this been shaping up in the last 12 months, whether the ticket sizes are increasing, declining, how has been the trend there? That would be my first question.
Yeah. So if you look at currently when I'm talking about the SIP book of 456 crore, we have almost close to 17,80,000 live running SIP. So average is close to about 2,600, 2,700 rupees as of now, or probably 2,700 rupees kind of an average which we have, and gradually we are able to increase our average SIP in last couple of years. Regularly, I think the new money which is coming at a higher average rather than the old book. So I think gradually our average is improving. When I talk about so that is first question about almost about 17.8 lakh SIPs and 456 crore of our current book. Karvi last year when we acquired, we had almost about 3.5 lakh SIPs of Karvi. So I think close to exact number, how many SIPs has been merged, I think I may not be having handy number, but I believe almost about 1,63,000 SIPs has been transferred to us, and rest were discontinued during the process. So because there are a lot of things which require to be transferred from the platform so there are two set of SIPs. One were direct SIPs with AMC, and another where the SIP where the mandate was in favor of Karvi. So the mandate which were in favor of Karvi cannot be transferred, so that has not been transferred, but close to 1,60,000 SIP has been transferred in our code. So this is broadly about the question of the SIP and Karvi also.
So Karvi average ticket size is also similar for what we have today?
Yeah, Karvi, because there are some SIPs from the direct side also which was not serviced by the IFA. So I think average ticket size was more or less similar, or there may not be a significant difference, because otherwise our average is also a little bit lower than the industry average. So we are at 2,700 average, so Karvi also will be similar.
Okay.
I don't have the exact number as of now.
Okay. Just trying to understand this more. When you say that only the direct SIPs have been transferred to you, would you own anything on it?
Yeah, so all the assets and no, when I'm saying direct, this is not the direct core. Sorry. Okay. When I'm saying direct, in this is either you can start the SIP by way of giving your mandate in favor of AMC, wherein the AMC you will give money directly to the AMC in the regular plan, and second mode would be you issue a niche mandate in favor of platform like Funds Bazaar. Karvi was also having their own platform. You issue a niche mandate in favor of Karvi, and Karvi we collect money through payment gateway and give it to the RTA. So वो जो second portion मैं बता रहा हूँ जहाँ पर Karvi के favor में mandate था, that has not been transferred to us because technically it cannot happen.
Oh, okay, got that. Thank you. And secondly, do you think that of late in the last 3 months there has been increased pressure on redemption? Yeah, so redemption has been.
I think let me bring Shirish in the picture. Let Shirish address these questions on this side. Shirish.
Yes. So we have not seen any redemption pressure in our system in last 3 months. Of course, what we can say that the number of gross flows, the fresh money, I think SIP has come down little bit. At the same time, the redemption pressure actually has come down. So if you look at our net sales number in this quarter, when you compare with the previous quarter, it is almost the similar, rather little higher. So in our system, we have not seen the redemption pressure. Rather, we have always seen that when the market goes up continuously, that time I think you might see the redemption pressure. I think let us say after a dull period of 1 or 2 years, when the market goes up, that time historically we have seen some kind of redemption pressure. But otherwise, if there is a short-term correction in the market, probably people wait for the money to be recovered and then they redeem. So frankly, the redemption pressure is very less in last quarter.
Okay. Another question is on your life insurance book. What is the kind of product mix that you will have in terms of product protection, savings products within that non-par and par?
So basically, our major business is happening on the non-par products. So I think if you have to rank the business numbers, non-par products contributes the most, followed by term plans, followed by the par plans.
Okay. That's helpful.
Business is zero.
What is zero?
ULIP business is zero.
ULIP is zero. Okay. Right. Yeah, thank you and all the best. Those are my questions. Thank you.
Thank you, sir.
Thank you.
We have the next question on the line of Neha Sharma from Pearl Global Investment. Please go ahead.
Hello, good morning. Sir, can you please give some guidance on the yields going forward?
Suresh?
Hello? Am I audible?
Yes, we can.
Yeah, you're audible. You are asking about the yield on the mutual fund assets, right?
Yes.
Yeah. Suresh? Sorry. I think if I tell you about the yield, we believe that in the near terms we'll be able to maintain the current yield which we have, mainly because if you look at last year, the Carvi assets which we acquired, I'll just give you, I'm not giving the exact number. If you look at hypothetically, our current yield is in the range of 1%, while the Carvi assets which we acquired is in the range of 65 basis points. And historically, we have seen that the average life of assets is in the range of 3 to 3.5 years. And if you assume that every 3 years, 3.5 years, if the assets get churned, your assets will get repriced. So we believe that whenever the Carvi assets will start getting churned, we'll be able to reprice this at a higher yield than what Carvi used to have. So there is a gap of about 35 basis points. So that might help us. That is number one. Number two is when we are talking about the yield, there are two parts to the yield. One is the current book of 53,000 crore, where the yield is already committed by the AMC, and there we'll continue to get the same earning. Incrementally, whatever new business which will come to us, there only the yield pressure will come, and that pressure will come only if the money comes into a higher higher size scheme AUM. So as the scheme size increases, gradually the TR also reduces, and as TR reduces, they will start transferring some kind of margin pressure to us. So normally we believe that we being so there are two parts. One is that if let's say there is a AUM of a scheme moves from a 25,000 crore to 30,000 crore bucket, then their excess ratio goes down by let's say 3-4 basis points. They might pressurize us to reduce our earning by 1 or 2 basis points. First of all, we make sure that doesn't transfer to us. But if that transfer to us, significant part of that also can be transferred by us to our distributors, because we being a platform, we will also we share the revenue with our distributors, right? So we'll be able to transfer. So more or less, some pressure might come gradually, but that will not be very significantly visible. And we believe that the volume would be such larger that some minor pressure on the yield may not be that significant. So overall, there are two parts. One is incremental pressure, if at all come, would be very less. And second, we might be having the support of Carvi assets being repriced over a period of time, which will help us. So at least we believe that next 12 to 18 months, or probably for next 2 years, significant visibility of margin pressure is not there.
Okay. So one more question. So I just want to understand whether our market share would come down at the cost of yields or any other strategy which you would protect for our yields at the current rate.
So market share, we track our market share in the equity AUM rather than the total AUM because we do not represent significantly debt side of the industry. And if you look at our current asset mix, we have 94.1% assets coming from equity and equity related assets like your equity funds, balance advantage funds or hybrid funds or FOF. So that is where we represent. And I think because I don't see there will be any impact on the market share because of any strategical shift. There are two things. We look at our market share equity in the equity of Max ETF. The ETF is something which we are not significantly present. So that segment, I don't see there will be an impact on our market share. We'll be able to, and we are able to demonstrate growth in our markets, and we assume that because of our granularity, because the 50% of, the main reason would be if you look at my gross sales, 50% of the money coming through SIP, while the industry, that number is only 28%. So I have a very steady flow of SIP which always help me in the dull time to rather improve my market share. So I believe gradually we should be able to strengthen our position.
Okay, that's it from my side. Thank you, sir.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Silky Jain from Canara Robeco. Please go ahead.
Yeah, hi sir. Congratulations on a good set of numbers. So my question pertains to the insurance business. So we saw that in this particular quarter, insurance, is contributing almost like 10% of the overall revenues. And in your commentary also, you mentioned that the cross-selling would be a key point to look for in terms of growth. So how are we viewing this particular segment? What is the potential where it can reach like in the next 2 years? And how are we looking at the overall margins in this particular segment?
Shirish, Chirag?
I think somehow I was disconnected for a few seconds, but what I understood correctly is that the quarterly numbers for the insurance and how we are looking at the business. That is what I understood. Is my understanding right?
Yeah, sir. So the contribution, like how big this segment can be for...
Basically, if you look at our growth in the life insurance or the insurance business over 3 years, 19 almost it was contributing less than a percentage, and now it is almost 8.5-9% of our total revenue. One, definitely the size of the life insurance revenue or the business compared to the mutual fund business with us is small. So that also is contributing the higher growth. But at the same time, we started focusing insurance as a cross-selling product in our system in last 3-4 years, and that is helping us. So we strongly believe that over a period of time, the growth of the life insurance or the insurance business in our system would be higher than the mutual fund business. Of course, mutual fund business is growing at a healthy pace, but at the same time, insurance business will grow at a faster pace. Today, we are around 8.5-9%. What we look at, definitely over a period of few years, it might cross double-digit number. Another important trigger I would like to highlight is that almost around 6,900 POS are registered in our system. If you look at the overlapping of these number of POS with our existing ARN holders, is hardly around 3,500-4,000. So out of our 25,000 ARN holders, 26,000 ARN holders, hardly 4,000 ARN holders are converted to POS. So if you look at the potential for us to cross-sell the insurance business in our existing system is really, really huge. Fourth point, I would say that the penetration of the insurance, whether it is life insurance or health insurance, is very, very low in the country, and specifically after Corona, I would say that the acceptability of the insurance business has gone up significantly. That also we believe will help us grow this particular business in a faster pace. So I think next few years we see a very healthy growth in the insurance business.
So, sir, like in terms of cost, so there would not be any incremental cost in terms of because the same, the ARN holders would be doing this business. So obviously it would be very much higher margin accretive segment as well. So what could be the delta in terms of margins as well? If we look at it from the, incremental people coming and selling, like we get a cross-sell opportunity, what could be the margin delta we get from this segment?
So basically, if you look at currently, we are leveraging existing set of distributors. Now, leveraging in the sense that we go and cross-sell the POS business to them. Of course, to manage the insurance business, we have a dedicated team that is a GenX, what we are talking about. Obviously, to grow the business, we also might require to hire more and more people going forward in the GenX as well. Second point, if you look at the contribution of POS in the total insurance business currently is growing. But historically, main business used to come from the team, our wealth team or you can say the online business. Incrementally, of course, the more and more business is coming from the POS side. Margin point of view, yes, we might not require to incur the corresponding cost as the revenue growth. But of course, I think some kind of cost escalation could be there when we grow the business. Margin, if you want to compare with the percentage margin that currently what we are enjoying, the EBITDA margin here in the GenX, probably that might come down because as I said that the POS contribution is growing. But delta point of view, yes, if you look at the absolute premium or the kind of premium volume what we are doing, there we see significant growth. Even if you look at this particular quarter, that is July to September quarter, in the life insurance, we actually almost double the number compared to the first quarter. And that is again the highest in the history, I would say. That is mainly contributed by more and more number of POS contributing to the business. So I think we are very, very gung-ho about this particular business.
And so any challenges we see in this particular segment in terms of distribution, or we are much more confident and we feel that this can, create much more, in terms of growth we don't have, because overall there are many other players also who are entering in this particular segment. So how do we see that particular area?
Of course, there are many players entered in this particular space, I think last 3-4 years. Definitely they are bigger, stronger and growing very, very fast. Our market is not, we don't want to go out and acquire the POS. I think rather we try to leverage our existing set of distributors in the mutual funds. So we have sufficient growth available. As I said, the numbers itself, I think 26,000 ARN holders, that also is growing every year by 5,000-6,000. And out of that, only 4,000 we are able to convert into the POS. So even there are so many competition, so many players entering in this particular business, I think we don't have any worry as of now that we will not be able to grow. हमारे पास भी इतना सारा cross-selling opportunity available है. So at least next 3-4 years, I think we are not worried that we need to go out right now.
Okay. So, sir, just again, checking on this, so almost from this 9-10%, does this segment has a potential to go to say 20% plus kind of contribution to overall revenues?
That depends on two parts. I think what will be the percentage growth in the insurance business and what will be the percentage growth in the mutual fund business. We are very, very confident that the mutual fund business is going to grow very, very fast. As long as mutual fund is growing, of course, insurance is growing faster. I think down the line, this can become, but I don't see that next 3-4 years this become 20%.
Sure, sir. That's really helpful. Thank you so much.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question on the line of Prakriti Banka from HSBC. Please go ahead.
Hi, good morning. You had just mentioned that the yields on the Karvi book have been lower at around 65 bits. What is the reason for that?
So could be mainly because if you look at all the Karvi assets are almost 3 years old or 4 years old, and before the industry moved to all trail model, previously the situation was you used to earn higher upfront in first year, or the upfront brokerage was there and the trail was perpetual, right? I think most of the assets are of the old period, and that's the reason. That's my understanding, because I'm not knowing exactly what was the pricing understanding Karvi had with AMC, but probably those people who were enjoying higher upfront and the lower perpetual trail, that must be the reason for them.
Right. So you're saying most of this book right now is probably towards the end of, what you see as a typical life cycle of, of an investor, and you will see this repricing happen quite quickly.
Yeah, typically, because the normally investors average assets stays for about 3.5 years, and we are seeing that 3.5 years getting completed. So it may not happen also. It might probably get delayed by a year. Probably it may not happen in the current year. But I believe that as these people are going to be addressed, because what was happening is last 2.5 years, Karvi investors or Karvi distributors were not serviced by anybody. So now they are also becoming active into the business. They are meeting the customers. When you meet the customers, you might do the restructuring of the portfolio. So we see a possibility that some pressure might come because of new money coming from AMC at a tad lower by 1 basis point, probably simultaneously, which will help us also with some kind of churning which will happen on the Karvi side. So more or less we believe that we'll be able to maintain the similar margin. That is the reasoning I'm just giving.
Right. And just, when you talk about cross-selling, and you are engaging these POSPs, etc., how does that really work? I mean, a lot of your MFTs, etc., are also then going ahead and getting these licenses to distribute insurance, or what are you? I mean, how is the cross-selling happening?
Yeah. So, Sirish, your address?
Yeah. If you look at the requirement for distributing the insurance business is that they need to get the POSP license.
Right.
Another requirement for these guys to get the POSP license is that they should not be registered with any of the insurance companies.
Yes.
These are the two main requirements. Now, those distributors, those MFDs who are already doing the insurance business with someone, or let us say LIC or any insurance companies, they themselves cannot become the POSP. They cannot take the POSP license because they are already registered with one or other insurance companies. So, and the benefit what now they are getting with Prudent, because in the same group, same place, they are able to distribute all the insurance company because we are the insurance broker. So they want to distribute the insurance product with Prudent because everything is available at one place. Sometimes it happens that they are already registered with IRDA, so they are not in a position to take the license in their own name. So obviously, they take in the family member's name. So that is how this particular business is happening. So biggest advantage what we offer to the agent who are already doing the insurance business, they can distribute only one product. Here, when they work with GenX under POS, they can distribute all life insurance, all health insurance, all products. So that is the biggest USP. And second, I would say is the technology what we offer. That also could be the interest point for them.
So then, the ones who are registering with you as, POSPs, they are probably already, in the family involved in insurance business in some way, because it's a very different, different ball game, right? I mean, there will otherwise involve quite a steep learning curve in how you sell insurance versus how you sell a mutual fund product.
So I believe majority of mutual fund distributors in the industry have come from the insurance industry. Okay. If you look at our data, out of 26,000 ARN holders, what we have, our gut feeling is that I think more than 2/3 of these distributors are historically doing life insurance business or the insurance business, and they have migrated to the mutual fund business additionally. So the experience of dealing in insurance is already there within the family. So migrating or starting as you say, it's a steep learning curve. So learning for this kind of people would not be difficult because they are selling insurance for years. I think mutual fund they might have started in the last 5-10 years, but insurance they might be dealing for last 15-20 years within the family. So steep learning curve, I understand, but as I said, more than 2/3 of our distributors are historically selling insurance product. For them, it is not that difficult.
But when they would have been selling these, insurance, wouldn't that have been largely more ULIP? And you mentioned that, for in your portfolio, you're doing absolutely no ULIP as of now, right?
So basically, if you look at majority of the distributors who are right now working with us are coming from LIC. And historically, LIC is again either non-par product or the par product. LIC's contribution in the ULIP is very, very less.
Right.
Secondly, to sell ULIP kind of product or the market link kind of product, anyways we are offering or they are selling mutual funds. So they don't want to mix ULIP. Anyways, I think mutual fund is offering the market link product. So obviously, we also would not like to offer ULIPs, which is almost similar kind of product compared to the mutual fund. That is as a proposition. We have kept it as a non-par product or the term plan.
Got it. Got it. And for these POSPs, as of now, I mean, are you taking some portion of the commission, or is right now the focus on just building mass in terms of more POSPs attached to your platform, or are you taking something?
So we never believe in the growth with the compromising in the margin. Even if you look at the mutual fund business also, to gain the market share, we will never compromise on our margin. Similar strategy we are also adopting in the insurance business as well.
Okay. But is there scope for take rate to improve, or are you already at the optimal level?
Improvising in the margin in the insurance space, I don't think that there is a possibility, and the same goes for the mutual fund as well.
Got it. All right. Thank you so much for answering my question.
Thank you. We have the next question on the line of Ronak Chheda from Avrega Capital. Please go ahead.
Hi, sir. Am I audible?
Yes.
First, congratulations on the great set of numbers. So my question is on MFDs. So if you were to see of the total 24 odd thousand MFDs, more than 50% of them have joined us in the last 2 years, right? So can you talk about your experience as of these MFDs? Can they scale up at what pace once they are past that 2 years, 3 years into the business, and can they bring incremental momentum to the business for us?
Suresh?
So basically, if you look at the number, less than 2 years, number of distributors, as you said, is almost 50%. Their contribution in the AUM is around 12 to 13% currently. But if you look at their contribution in the business, is almost 25%. So if you look at the mutual fund business, when any new person comes and joins the company or the platform, obviously they start with the small business, SIPs or the fresh purchases. So their contribution in the gross sales obviously is much higher, but their contribution in the AUM terms is always lower. So when you compare the profitability or the revenue generated from the new set of MFDs, it would be lower. But when they gain some kind of maturity, when they become 3, 4, 5 years old in the system, obviously they also contribute huge amount in terms of revenue. So again, I'm repeating the same number. As you said, 50% of our MFDs are less than 2 years. Their contribution to the AUM is around 12-13%, and their contribution to the business around 25-26%. So that itself is the potential of the business.
Experience that inflection point of scaling up as a MFD would be a fair assumption?
So inflection point of the MFD, I think I would say that look at the number in the industry. Currently, almost around 1.2 lakh MFDs are there in the mutual fund industry. 23 lakh insurance agents. So I think we strongly believe, and recently you would have seen that MP is also focusing on MFD Kare Shuru as a campaign, and they also are targeting 5 lakh MFDs. So one good thing happening, we are sitting on the inflection point where the number of MFDs in the industry is going to grow. So that we are very strong believers that more and more people will take mutual fund business as a career. Second, as Sanjay Bhai has said in the beginning, that almost 20% of the industry's ARL holders are currently associated with us. And we see a trend that more and more MFDs are interested to join the platform to take the advantage of technology and the multiple products. And we are very well placed there. So two things are happening. Yes, more and more MFDs or the distributors are joining the industry. More and more people are interested to join the platform, and we are very much placed there. So you can say that, I think we are sitting at the inflection point of number of MFDs.
This is helpful, sir. And sir, my second question was on the yield, where you partly addressed that the point. So my question is, as industry AUM grow and as these TERs contract, sir, what is your sense? Is it on a percentage basis that we negotiate with the AMC, or is it on absolute bits basis our contracts or negotiations work? Sir, how does that relationship work, if you could throw some light?
It's a difficult question to answer because there is no standard mechanism of negotiation because every AMC's dealing would be different. Certain AMCs might be talking in percentage terms, certain AMCs might be talking in the absolute terms. If you look at, as Sanjana also said in the beginning, and if you look at the historical data, gross sales, I think the rate would change only on the new business and not on the old business. So that is what is most important thing for us to understand, that whenever the size of any scheme increases, it is not going to impact whatever earning we have on the existing business. And if you look at historically, our gross sales, that is the new sales, is almost, you can say 20 to 25% of our AUM. So if I go with that particular logic, probably you can say that my entire assets will come in the new price in 4 years. So whenever even there is 1 basis point, let us hypothetically assume that 1 basis point margin is impacted in this financial year. So that 1 basis point margin is impacted on the 25% of our AUM or the business, or 20-25% of our business or AUM. So probably you can say that my gross yield may come down by 0.25 basis point. So as I said, it is not impacting the historical AUM. It is only and only impacting the new sales, and new sales is around 20 to 25% of the AUM. So overnight, it is not going to change our yield. And again, coming to your point, there is no fixed formula. It is some AMCs is a sharing basis, some AMC in an absolute negotiation.
Got it. Thank you so much, sir, for answering my question.
Thank you. We have the next question from the line of Pawan from Renaissance Investments. Please go ahead.
Yeah, hi, sir. So I just had one clarification. So 7,000 odd crore of Karvi book, what percentage of that is contributing to revenue as of now for us?
So the segment reporting has not been made by us, but to be very frank, whatever projection which we had in our mind while bidding for 151 crore, we assume that we'll be able to earn at least about, say about 12 to 15% of the assets which are bidding, and I think the earning is in line of that. So I think your monthly accretion to the bottom line would be close to about 1.5 to 2 crore easily. Yeah.
From that 7,000 crore AUM, you are earning about 1-2 crore on a per month basis.
1.5 to 2 crore, because see, there are a lot of payout to the partners also, because it's a business which is also significantly driven by the mutual fund distributors. So there is a payout. So net earning which we have from Karvi assets would be close to about 1.5 to probably 1.75 to 2 crore. We do not have the exact numbers, or it's not an audited number, so I can give you approximately 1.75 crore kind of earning which we have on a month-on-month basis.
Okay, and the repricing of this book, what is the expectation in terms of timelines by which we think this entire book will get repriced?
So I think as Sirish explained, I also believe that in next 2 to 3 years, at least significant part of these assets might get repriced, but it's going to be a gradual process, because now the servicing to those customers, servicing to those distributors has started, and once they'll come into a regular servicing to the client, I think you'll see the restructuring will be happening. So I believe in next 3 years that entire assets, which was actually, if you look at today, it's almost about 16-17% of my total AUM. Right, so 8,000 crore and 50,000 crore, 49,000 crore of my equity AUM. So almost 16-70% assets are likely to be churned in next 3 years. And there the possibility of adding 35 basis point is a very significant change which will come.
Right. Okay, sir. Thank you so much.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, thank you for the opportunity again. See, on the debt segment, our share in the retail, our share is at 94% of the equity, 94%, while rest of it is very less. And primarily, I understand that would be debt. But if you look at the industry, the retail book is possibly the retail share in the overall retail book, possibly it will be around 75%, 70-75% would be equity, and debt would be a good share of it. So are we strategizing anything with regards to getting the incremental flows on the debt side as well? Because most of your customers elsewhere would also be putting money on fixed deposits or lying their money in some saving bank account. So are you planning to get a push and get incremental AUM on the debt side as well?
So I think on strategy, let Siri's address that, but if I give you the industry number, the total AUM of the industry in the month of September was close to 40 lakh crore. Out of that, almost 15 lakh crore was from non-equity AUM. Within that, the individual was only 4 lakh crore. So overall, if you look at out of 40 lakh crore, individual investing in non-debt is only 10%, and our share is 6%. So we are purely representing. So if you look at the composition of Prudent's AUM, almost 50% AUM has been built up through SIP, and SIP is mainly into equity. So you look at the granularity of the book, that is number one. Number two, industry represents 10% of retail AUM, which includes the HNIs also, while we are pure retail. And that's the reason I think if I talk about 6%, 6% is a fair share looking at the industry, number one. Number two, when I'm saying the debt, we may not be having exposure in debt through mutual fund. Otherwise, we have a very strong debt desk available with us. We do a secondary market and primary market bond dealing, and we also distribute the fixed deposit. So in terms of retail investors, they do not have a tax arbitrage, and hence probably mutual fund may not be that lucrative or attractive for them to invest into a pure debt segment. And whatever assets we might be having in debt is also meant for probably a short-term parking, or a lot of money might be getting transferred to equity by way of systematic transfer plans. So this is broadly on that. Strategically, let Siri's address on that.
I think, Sanjay, you already covered that point. So I think to give you more statistics, out of the industry's total almost 40 lakh crore AUM, individual investors AUM is almost 22 lakh. Out of that, debt is around 4 lakh. So if you take the percentage of the individual investors' debt AUM is around 20%, but this mix is also included by way of HNIs and everyone. If you look at our average AUM per PAN is around 3.5 lakh rupees. So practically, within individual, whoever are participating, I believe they are more on HNI side. Our target segment, our clientele more is on a retail side. Of retail clients having the investment in the industry in the debt is really very, very less. And as Sanjay said, around 10%, we are around 6%. We are not deviated from that particular space. Second is we have got multiple products, as Sanjay said, to offer to the debt. And I think debt lately, I think last 3-4 years, debt component we are replacing, rather I would say that with the hybrid category, or you can say that with the BAT category. So that is a conscious call which we have taken to target the bank deposit money or the debt money by way of hybrid funds or even the BAT category funds.
Okay, get that. That's helpful. Secondly, in terms of commission payouts to your distributors, what would be the rough numbers for MF and insurance?
Yes, Sirish.
Basically, we don't have a proportionate sharing model. So we don't say that this is the percentage which we share on our receivable. If you look at our historical payout ratio in the Prudent level, it ranges between around 60 to 62% of our gross receivable. As we communicated earlier also that this is on a total receipt of Prudent and total payout from Prudent. Now, roughly if you look at Prudent's composition of the AUM is almost 10% is contributed by way of our B2C channel and almost 90% is contributed from our B2B channel. Now, 10% of our clientele who are catered by our B2C channel, there is no payout. And so 90% of our AUM, we pay the brokerage, and that comes to around 60 to 62%, as I said. So if you put some ballpark number roughly on the distribution side, B2B channel, our gross payout is in the range of around 67-68%. So that is what the rough payout. It is not a standard practice. Again, I would say that we also have a tiered structure. The smaller the distributor, lesser the sharing, and bigger the distributor, higher the sharing. So roughly you can say that our weighted average cost is around 67-68% on the mutual fund side. On the insurance side, currently as the POS, as you said, industry there are multiple things available. So there are base commission and there is a reward. So I think if you put it this way, combined composition, our total sharing in the insurance side also remains almost the similar way only.
Okay, got that. And with regards to the POSPs, at one point you had mentioned that you had converted down, you have some 6,000 plus POSPs, including the family members, and on the other side you mentioned 4,000 ARNs converted to POSPs. Is it right to assume the remaining 2,000 family members of the existing ARNs?
Majority of them you can, yeah, definitely you can assume that way, that the remaining 2,000 odd would be the family members. Yeah, majority, because we don't target to go out in the market and acquire only POSP. So yeah, you can say it is safe to assume that 2,000 would be the relatives.
Okay. And secondly, there is possibly the IRDA might allow individual agents to also tie up with 3 insurance companies each in life, health, and general. So would that kind of hamper the growth going ahead?
I think I would say that time only would say that whether it would impact the growth or not, because most important part today, the technology part. I think in that particular space as an individual, what Prudent business is all about. Prudent business is nothing but the technology and the product and the servicing. As a mutual fund distributor, he is allowed to sell all the mutual fund companies, but still 20% of the distributors are working with us. As you are saying that there is a proposal in the IRDA wherein the individual agent would be allowed to cater the 3 insurance companies, wherein mutual funds distributors are allowed to cater all insurance, all mutual fund products. So my point is our proposition of technology, service, multiple product, all product in one place, I think that proposition still lasts. So I don't see that if it comes up with this particular thing, it might impact our business. So I think we don't see that.
All right. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Rohan. Please go ahead.
Sure, sir. Thanks for the opportunity. I just wanted to understand the direct channel, which is currently 10% of the AUM. How have been the flows, new flows in that channel, and what is the average folio size in that channel right now?
So last few years, we have not expanded that particular business. Over a period of time, if you look at the percentage contribution of that particular channel is obviously coming down. If you look at the flows from that particular channel, I think that is in line with the industry. So I won't say that there is a big difference compared to what the industry is talking about, the growth or the flows which is coming from that side. If I give you the number currently from that particular side, I would say one sec, I'll just give the exact number also. Out of the total gross sales, almost around 400 crore of gross sales has happened by way of B2C channel. So even if you take the percentage, it is almost the similar compared to what we have done this year.
Sure. And the folio ticket size and the customer segment in this, where we are getting the new customers?
We don't have a specific segregation of that thing, but on the B2C side, we don't cater to the retail clients. We only cater to the HNI clients. So obviously, the average folio size definitely would be higher compared to what we have at a Prudent level.
Sure, sir. And if you can just share what would be the insurance commission payout for the quarter and for the first half to the POSPs?
I think we don't have a segment reporting, right?
We don't have a segment reporting, yeah. So, but what Siri said that the very small percentage of business currently comes through POSP, and there the POSP payout would be reasonably higher than. So the POSP payout would be definitely higher, but the percentage data of direct POSP and that segment reporting is not provided.
Okay, fine. Sure, sir. Thanks.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Yeah, thank you very much for everybody for participation, and yeah, thank you.
Thank you.
Thank you, everyone.
Thank you so much.
Thank you very much.
Thank you. Yeah.
On behalf of Equirus Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.